Welcome back to the Inner Circle Show. In today's episode, we need to talk about why Tesla stock has been doing so well. And also there's been so much Palantir news, including a new demo video and even a new partnership and much, much more. But before we get into all of that, don't forget to like this video, subscribe to the channel and turn your notifications on so you do not miss an upload Monday through Friday. So yesterday, Tesla stock had a great day for once, and it was really nice to see. It finished Wednesday up by 4.81%. But why? There are some clear reasons actually. Let's discuss them. I think firstly, the recent VW and Rivian deal that we heard about is showing the market, showing the world that actually it's really, really difficult to sustainably make a profit from selling EVs. Tesla are the only fully EV company and also the only company out of all automotive companies in the US actually making a profit on their electric vehicles. Everyone else is losing a lot of money, Rivian and VW included. But it also shows us just how necessary software is. For a long time, the vehicle industry was all about the hardware. Hardware was number one. You had to get that looking good, you had to be able to manufacture that at a good price, and that's what mattered. But that has now shifted, and actually I would argue that software in vehicles is way more important than the hardware. Of course, the hardware is important as well, but a lot of legacy companies and even EV startup companies are actually struggling with how to integrate software into their vehicle to actually stay ahead of the competition. And I think this shows us that there's actually a race happening of software innovation towards high-tech cars, but specifically towards autonomous cars. And Tesla is ahead. All of this information, knowing how much money VW gave to Rivian to actually get access to software integration, all of this stuff, we spoke about this in yesterday's video, but that just tells us that they're willing to spend money because they know how important it is. We know Tesla is far ahead of the competition on this, so I think it's just another example of how many companies will actually turn to Tesla and license their FSD technology from them when they realize they should be doing this already, but when they realize that they've got no other choice. But I would say that there was something else that was even more important than that for Tesla's stock price increase. And that was that Stifel initiated coverage on Tesla once again and gave a price target of $265 a share, which is actually a 35% price increase from the current stock price at the time of making this video. This firm used to cover Tesla a while back, but they stopped. However, like I said, they've initiated coverage, and let's just take a look at what they had to say. So Stephen, an analyst from Stifel, has initiated a new buy rating on Tesla. So he has given his buy rating due to a combination of factors, including Tesla's position as a global leader in the EV market, absolutely, anticipated robust multi-year growth, absolutely, innovative product development, yes, we will see an expansion of the product line for sure, the company's refresh Model 3 and the upcoming Model Y, as well as the launch of the next generation Model 2. Yes, to be honest, people are forgetting these things. People are so concentrated on Robotaxi fleet and Optimus now that we're forgetting that there's energy, there's all these product releases, upgrades and so on, are expected to drive significant sales volume. Additionally, Tesla's advancements in AI-based full self-driving technology are projected to create substantial value through sales, licensing agreements, and the facilitation of future Robotaxi services. He also noted that Tesla's strong financial standing and free cash flow are likely to support ongoing growth and research and development initiatives. Yes, for a long time, Tesla's fundamentals, their balance sheet, it wasn't the healthiest. They were struggling, but they have come such a long way and they are in such a place of strength now. Moreover, the analyst highlights Tesla's expansive supply chain and internal manufacturing capabilities, which provide a cost advantage. Not spoken about enough because it's not as exciting as a new release, but very, very important. And these things will tie in perfectly with not only the Robotaxi fleet, but Optimus down the line as well. The company's extensive supercharger network is seen as a driver of brand loyalty, sales, and profitability. Services will increase, services and other on the revenue. The potential for growth in energy generation and storage is also considered a key factor. So yeah, he's considering lots of different aspects and seeing how all of those lead to growth trajectory. With recent estimate revisions stabilizing, concerns that may have previously weighted on the company's outlook are diminishing. So they've given a price target of $265 a share. Takes into account Tesla's projected 2025 EBITDA for the core business, as well as the anticipated value from full self-driving and Robotaxi initiatives. Despite recognizing risks such as increased competition, raw material costs, and macroeconomic headwinds, I don't think there's much competition. There is some, of course. BYD is definitely competition. Raw material costs, they're becoming more and more vertically integrated, which will help control that. And also that with the macro, it comes and goes, ebbs and flows. It's not always the worst, it's not always the best. It really just does depend. Short term is what I'm trying to say. The overall assessment supports a buy rating for Tesla stock. In another report released today, Morgan Stanley also maintained a buy rating on the stock with a $310 per share price target. So we are seeing a number of analysts actually come out and say, hang on a minute, we do need to be paying attention now, and they're increasing their price targets. Not everyone. Of course, we still have a lot of bears on Wall Street that just don't see the potential for Tesla at all. But it's good to see that some are actually paying attention. So yeah, I think that price target in that coverage was actually the main cause for the price increase in the stock that we saw. But we also have some other things that I'll just touch on now. We have the delivery numbers coming up relatively soon. And of course, the earnings will be with us before we know it. But even more excitingly than that, we have the 8th of the 8th fast approaching. The robo-taxi event, the launch of the robo-taxi. That is one of the most exciting things this year in terms of the stock market, in my opinion, by far. And I don't think this necessarily played into the stock price increase, but I did just want to mention this in case you guys haven't seen it. Maybe you're not on X, maybe you don't follow the world of Tesla as much as I do. But Tesla Economics, great name, posted this. And this is actually an old video, I believe, from around 4 years ago. But in this video, and you can watch it, Cathie Wood basically said, the longer the base, the bigger the breakout in terms of Tesla stock. This is just because prolonged consolidation of a stock can build stronger support, which then just leads to a more powerful movement upwards when it does break out. Of course, though, this is not guaranteed. This is not always the case. But then Elon replied with a 4-letter word, very simple, just saying true. So he's thinking the same thing. Now, like I said, this is an old clip as far as I know, but the same thing applies now. Tesla stock has been trading sideways, relatively sideways, for quite a long time. And actually, the company is getting way, way, way more valuable. So the stock price is just not matching the company's value. And at some point, surely we will see a breakout. Maybe we've even started to see that, begin to happen. But do let me know what you think about all of this in the comments below. We have quite a lot of Palantir news and information to cover today, so let's not mess around. First up, we have a new Palantir partnership. Well, not Palantir directly, but let me explain. Surgeons announces collaboration with Mayo Clinic to innovate the healthcare supply chain. So that there doesn't mention Palantir at all. It mentions Surgeons and Mayo Clinic. But the important thing to note is that Surgeons was actually developed in collaboration with Palantir and with Concordance Healthcare. Surgeons is basically a software as a service, a SaaS ecosystem for the healthcare supply chain, and it aims to connect providers, distributors, and suppliers, like I said, all within the healthcare supply chain. And the important thing is actually it's built on Palantir's Foundry platform. Just like we have the Airbus and Palantir Skywise platform that is specific to the aviation industry, Surgeons is an ecosystem, that is specific to the healthcare supply chain industry. So basically, this is a new indirect partnership for Palantir, so we should still be talking about this. So you can read this whole thing in your own time if you want, but let's just talk about what it's actually about, what problem this partnership is trying to solve. So first and foremost, it is enhancing the healthcare supply chain. So by integrating Surgeons into Mayo Clinic's digital supply chain, this partnership is trying to create a resilient and high-value network of care. And then as with everything with Palantir, we are trying to improve decision-making. Surgeons is trying to provide near real-time visibility and flexible data connections that help facilitate informed, proactive decision-making through being predictive, forecasting, workflows, alerts, and so on. And again, a typical theme that we talk about with Palantir, this will really help bring together loads and loads of data that is everywhere into one centralized location to make actionable decisions, to make actionable information. And ultimately, all of this is going to help advance patient care. So why should Palantir shareholders care about this piece of information? Well, it's because it's an expansion of Palantir's ecosystem. Surgence is built on Foundry, the Foundry platform, like I just said, meaning that this collaboration that we're seeing is actually extending the use of Palantir's technology once again within the healthcare sector. This is something that we keep seeing happening. And it does represent, again, another revenue stream, but we don't really have any visibility into how much this collaboration was worth or the exact figures to do with Surgence at this point in time. And Mayo Clinic is a very, very well-renowned, prestigious medical institution that basically is market validation, right? Other companies within this sector, seeing Mayo Clinic, seeing Concordance, seeing Tampa General, all these different massive institutions, massive organizations utilizing Palantir in different ways, just shows the effectiveness of Palantir technology. And then this could lead to long-term growth and attracting other potential big names in the future. We've also had a new video released by Palantir. It's actually a demo video, and let me tell you, it has a very funky beat. I will play a bit of the video now on the screen whilst I tell you about what this demo is actually showing us, but I do recommend that you go away and you watch this with sound on in your own time. It's only a short clip, and I'll try and leave it linked below. So basically, this is showing us a new AIP Now release called the Industry AI Base Plate, and it's designed to revolutionize manufacturing operations by embedding AI at every single level of factory operations. And I should just quickly mention, in case you've not heard of this before, AIP Now is just a collection of pre-built, easy-to-use AI products and intelligent workflows, straight out of the box, ready to go, no messing around. And there's lots of different ones. You can have a look. Look, I'll show you now on their website. Different ones for different industries, for different use cases. I also wanted to show you this fantastic post on X that Arnie put together. And if you're not following Arnie, then you need to be, especially if you care about Palantir. Go and follow him over on X. But he's saying here, Palantir delivers the following, and he's got this from this presentation that was given. 33%, this is all use cases, by the way. This is all proof that Palantir is working. 33% acceleration of A350 Airbus production. 60% cost reduction per barrel at BP, 30% reduction in power utilization at Jacobs, 12% reduction in waste at Panasonic, 70% faster ERP harmonization at ESI, 65% reduction in transformer ignitions, 25% increase in productivity at Eaton, and $200 million cost savings at Tyson Foods. Software that works. That's the important thing here. We keep getting proof from the companies using Palantir that it's working. Real outputs. Look at this. These are big deals for businesses. Massive, massive deals. 70% faster, 65% reduction, $200 million cost savings. These won't go unnoticed by the rest of the industry, the rest of the companies within different industries that are not already working with Palantir. And all of these savings and efficiency increases, productivity increases, they'll all be coming from enhanced data analytics, improved efficiencies, predictive maintenance, optimization, and everything else that Palantir is providing. Oh, and also, just wanted to give you a little update here. You know, the other day in one of the episodes, I was saying how Palantir received quite a big downgrade from $44 a share to $8.50 a share from UBS. But when I was talking about it, I couldn't really find much information. I couldn't really find which analyst was giving it this price downgrade and why. Well, it turns out, guys, that it was an error. It was an error. They didn't mean Palantir at all. Apparently, they corrected themselves, but the ticker that they meant to say was Playtika, not Palantir. But this isn't good. Although it was a welcome stock price decrease in terms of accumulating more shares, like many people enjoyed buying shares at the cheap, it did cause a big drop in the price, and for no good reason. That is not a good thing that we want to see the stock market actually doing. I just don't understand why you wouldn't double check. It wouldn't go through a process at these companies to actually say, that is not the company we're even speaking about here, and that's going to have knock-on effects. But you do have to start asking some questions, don't you? But do let me know what you think about all of this related to Palantir in the comments below. Now, in other market news, yesterday we had the Nvidia annual shareholder meeting. Now, I do plan to do a little bit of a deeper dive about what was said and the main takeaways from this in a future episode. But the CEO, Jensen, said during the meeting, the Blackwell architecture platform will likely be the most successful product in our history and for the entire history of computers. If that is not a bullish, bold statement, I honestly don't know what is. At this point, Nvidia have proven what they need to prove. I do believe him, and I still think that there's a lot of growth left in Nvidia and other related stocks that are proven valuable. However, whether there's a pullback in the short term or not, who knows? Who really cares? If you're a long-term holder, things go up and down all the time. Is there growth? Is there value in companies like this for the future? In my opinion, I think so. Not financial advice, but that is why Nvidia has a place in my portfolio. And then you may have also noticed, whether you've got it in your portfolio or you just look at the stock market quite often, like I do, Amazon stock has been doing pretty well recently too. So there's been a few things that are playing into this in the world of Amazon. I should just quickly say that Amazon Prime Days are coming up pretty soon, the 16th and the 17th of July, I believe they are, and these always do well. So I'll definitely be tracking them, seeing what the outputs are from that. But we've also had a Bank of America upgrade. They are upgrading the price target to $220 a share. Now, I think that's probably one of the main things causing a sudden increase in the stock price. But also, we have to consider the Rivian and VW deal that happened. Why is that? Well, because Amazon own a 16% stake in Rivian. So of course, it's going to benefit them if the Rivian stock goes up. And I don't know if anyone saw this, but Amazon plans to launch discount store in bid to fend off Temu and Shein, which is an interesting move, but it does make sense. There are these really, really cheap ways to order clothes and homeware online. Obviously, two of the big ones given there. Actually, in my everyday life, I'm hearing these companies pop up more and more, people saying, oh, I've ordered off this company, oh, I've got a coupon code to order off Temu, whatever. Some people are telling me that the stuff is actually not that bad quality. Other people are saying it's awful. So I don't know. Who knows? But anyway, it makes sense that they're going after these cheaper online stores because Amazon own this. When you think about ordering something online that you want to arrive very quickly and you don't want to go out and get it and all the convenience, you want it at the best price, you turn to Amazon. Amazon Prime, obviously fantastic service. But if they start seeing that more people are actually going to these other offerings rather than theirs, they do need to do something to compete. And they want to be the big dog, don't they? Amazon always are. So Amazon hosted a closed-door event for sellers in China where it presented plans for a new budget storefront that features low-cost apparel, home goods, and other items. The storefront would directly compete with these two companies, like I just said, two emerging e-commerce sites, that's the word I was looking for, e-commerce, with ties to China that have grown in popularity in the US and here in the UK as well. It's unclear when Amazon intends to debut this shopfront, but the presentation notes it will start accepting products this fall. So I think this is kind of a watch this space. Amazon are coming after you. And personally, if Amazon are able to offer me on their storefront even cheaper items, I would rather go to Amazon than these other companies just because Amazon has more brand loyalty. It has more of a reputation. I'm not saying I'd rather support Amazon than another company necessarily. I just know what I'm getting. But it does seem like Amazon is really trying to expand its footprint at the moment and obviously integrate AI more and more into the business like every company is. But do let me know what you think about all of this in the comments below. On the screen now are the topics we will talk about exclusively on the Vault this week. And if you're a Vault member, I'm going to continue this episode and talk more about Tesla today, in particular about the possibility of the robo-taxi fleet using airless tyres and what that could actually mean for us shareholders. If you're not a Vault member, thank you so much for watching. I really do appreciate it, and I'll see you in Monday's episode. If you want to watch these episodes ad-free, get exclusive and extended content and a bunch of other perks, become an insider of the Inner Circle Vault. Link in the description.